Oops, forgot. Okay. Anytime between the... So this option right here expires this coming Friday. It says 6 June 25. Well, this one here says 13 June 25. 27 June 25, so on and so forth. Every week we have the ability to sell somebody the opportunity to buy what we already own at a certain price by a certain date. And for that, I'm looking to get a 1% return every single week. Not per position, per the total of my account. So if I have $100,000 in my account, 1% per week is $1,000 a week. Think about it. If you're going to buy, say, a hot dog stand, a burger stand, or some kind of a restaurant or a laundromat, you have to put a certain amount of money up. Okay, great. Well, that generates an income coming to you either weekly or monthly. Well, we're just doing the same thing. We're buying an asset. We're taking that asset and getting weekly cash flow from it. But the difference here is the asset, Kohl's, Ford, GM, whatever it is, it fluctuates in price every day. So what we're trying to do is balance out the fluctuation of the price along with the cash flow. So if I put in 100 grand, I want $1,000 back every single week. So whether I use Kohl's, Ford, Macy's, Nordstrom's, whatever combination, my outcome is still always the exact same. I want 1% every single week, simply, safely, predictably, and consistently. Okay? I only use good quality companies. Those are companies that have consistently increased their dividends, profits, to their shareholders for more than 2 decades. That's 20 years. Now, you can jump into anything you want. Anything. You guys can do whatever you want. I'm just telling you what my plan is, what I'm doing. Okay, this is what I'm doing because it's safe for me. I don't have the luxury of being wrong. Okay, now don't get me wrong. I am capable of going back to work. I just don't want to. I've been working since 1973, so nobody can say I didn't put my time in. So I was working since 1973 and I retired 2 years ago. Okay, I put my time in. I'm due to retire if I can afford it. So the only way I can afford it is getting that 1% every single week. So I can't be wrong, because if I do, I'll have to go back to work, and I don't want to go back to work. All right, hopefully that answered your question. Kind of long-winded, but okay. Oh, sorry about that. Mike, how you doing today, Mike? Thoughts on CRCL? I'm sorry, Cole. I don't do IPOs. Terribly sorry. I only look at companies that have 2 decades of consistent profitability. Okay, we checked yesterday. There's 10,030, I think it was 36, 10,036 different companies that we can invest in. I don't do IPOs. I don't do companies that don't pay dividends. And I don't do companies that aren't consistently profitable. And just for the fun of it, to make it even worse, I don't want to do anything unless it has a weekly option. Because I'm pretty okay with what I'm doing. Simple, safe, predictable, consistent, 1% a week. It works for me. It's fine. It's one for me. You guys you're here for free. Make up your mind. I promise I'm not going to try to sell anyone anything. Now, I do have shit to sell, you know, the books, the seminars, the webinars, all that kind of stuff. But here, I'm not asking for any money. I'm asking for your email address. I am asking, if you want to talk, send me a number and I'll give you a call. I was surprised. I looked this morning. Nobody left a number yesterday. Over 20,000 people came through the websites, because there's 7 of them. Okay, came through. Not one single person left a number, didn't want to call, talk. Hey, I would happy to talk and chat. Anyway, what's my favorite 3 high dividend companies? Jay, you're asking the wrong question. I'm not looking for high yielding dividends. I'm looking for consistency of profitability. Because if a company's consistently profitable and they have weekly options, well, I can get 1% every week from them, so why not? Milo, hey James, I bought Macy's last week at $11.63, but not sure what calls to sell this week. Well, more likely, from what you're saying, from what I'm saying, you're $11.63. Well, what's wrong with the 12s, the 11.50s, or the 11s? Because I have no idea what Macy's is at today. Because if you think, excuse me, Well, where was I? I forget where I was. Okay, so yeah, Milo. If you think I sit in front of my computer all day, you are so wrong. I just turned my computer on 15 minutes ago and it's still warming up. That being said, I have no idea where Macy's is at the moment, but I also have Macy's. Have you gone over Pepsi? Terry, not yet. We're just getting warmed up. We're getting all the intros, all the highs, hellos, all that kind of stuff. Can I be a mod, please? Caden, how's your day? Do you like Trump? Caden, thank you very much. I don't do politics, so I'm going to keep my opinion to myself. Jessica, thank you. Terry, we're going to take a look at Pepsi. I'll write it down. Because remember, we're following Pepsi and a few other companies, so as soon as they find their bottom, that's what we want to see. We want to see it drop down to the bottom, turn around, go back up again, and Pepsi's getting ready to do that. You're welcome, Terry. Let me try again. What's your 3 favorite weekly dividend companies? All right, Jay, you're getting closer, brother. You really are. Okay, there's no companies that pay weekly dividends. Now, I do have companies that I like the dividends that they have, and I also like the weekly option premiums that they offer. My number one at the moment is U.S. Steel. Love U.S. Steel. Love U.S. Steel, Intel, Dell, like those 3. Macy's was my favorite 2 years ago. Okay, Mark, if you sell a covered call and the stock goes down 5%, if the next week you don't sell a covered call for 2 or 3% gain and the option gets exercised, you will suffer a capital loss. How do you mitigate this? Love it. It's a great question there, Mark. Hold 1 second. I'm not going to forget it. All right, I'm just going to pause the questions right there because I want to answer that question. What else do I have here? Jay, I already gave you those 3 answers that you were looking for. What do I have there? If you please explain covered call, already did that. Yes, I'm up 48% on NVIDIA. Awesome, good for you. I'm not a capital gains person. I am a cash flow person. KView. What are we doing here? NEOs. Oh, NEOs. Home, all that. Love it. Covered calls are the way of steady early retirement. Thank you, Chad. Gotta love it, Chad. You're new here. I'd love to hear some more, brother. What you got, Chad? What you got? Jets, how you doing? Okay, so let's get back to Mark's question. Mark had a great question. Okay? Mark asked the question, if I buy a stock, do a covered call, get my 1% or so, and it doesn't get exercised. Well, the next week, if the stock goes down a little bit and I sell a covered call and I don't get 2 or 3%, and my stock gets called away, then I suffer a capital loss. Basically what he said. So, you're not going to like this answer. You ready? Okay, so the way to avoid getting called out when the stock goes down, okay, and you sell a call lower, if you get called away and you lose money, it's your own damn fault. Okay, if you are playing in this game, and it is a game, okay, stocks go up, stocks go down, how you position yourself and what you do, that's going to decide whether or not if you're going to be here for the long term or if you're just giving your money to the house, so to speak. So the reason why I say that, I look at my stocks twice a day. Once in the morning, just before the market opens, and as the market opens in the morning. So I'm usually on right when the market opens at 9:30, only because there's a lot of other people that trade along with me. And we want to see what is happening first thing in the morning. Great. If there's nothing predominantly going to cause me to create a loss happening every single morning, then great, fine. Then I come on here at night and I quickly glance over everything just to see what things did during the day. If then I lose, well then, yeah, I could have tried to avoid it in a better way. But if I don't look at it every single day, it's like this. You have pets, you have children, you feed and water them every single day. If you have money in your series, now I'm only talking 5 or 10 minutes a day. If you can't concentrate on your personal finances for 5 or 10 minutes every single day, maybe you don't deserve to get 50% per year. I don't know. Okay, it's your money. You do what you want. I'm just showing you what I'm doing. Every morning I get up, I take a look at all my positions. I've got 7 accounts to take a look at. Okay, so I look at each and every one. Okay, great. Where are they all? Well, great. Awesome. Other than something happening like that TDS, that Trump derangement syndrome crap causing things to fall and people panic. Other than that, it should take me 2 to 3 seconds for each one to figure out, is it okay or is it something for me to worry about? So needless to say, if my stock drops and is getting close to Thursday or Friday, because options expire on Friday, I can roll that option into the next week or a couple of weeks down the line. Each and every situation requires a approach, and they're all different because all the factors keep changing every minute. The numbers change and they change and they change. So what did I buy it at? What option did I sell? Where is it at now? Where does it look like it's going? Remember, this was created for a 9-year-old. If you can't figure it out and it was created for a 9-year-old, maybe you shouldn't play with this game. I don't know. Okay? I'm just giving out the information for free. If you guys want to use it, great, awesome. I'm here to help you out. I'll answer whatever questions you got, but I'm only teaching one strategy, and that is the covered call. You buy a stock, you sell somebody the rights to buy it from you, you create weekly cash flow. That's what we're doing here. Well, that's what I'm doing. Anyway, well, what do we have? So I'm hoping that answered your question. All right, Jay, I gave you the 3 stocks I was looking at. Let's go through more of these questions. What did I miss? My little rant. I get on a rant every once in a while. All right, good evening, Mike. Thoughts on, I don't do IPOs. Good evening, yep. All right, Milo. Let's jump in and take a look at Macy's. Milo is concerned about Macy's. All right, you're at 1163. My assumption, maybe you did, I don't know if you did the 12 of the 11 and a half last week, but if it expired and now it's at 1132, just a curiosity, why wouldn't you do the 1150s? It's going for 13. That's more than 1%. Or the 12s don't look that good, but you can always go out another week or two. 1 week out, it's going for 22. 2 weeks out, it's going for 26, which is over 2%. The further out you go, you have a lot of opportunities. It's not as if the stock dropped down to 2 or 3. You bought it at 1163. It's 1132 at the moment. It's not that big a deal. So just figure out what it is you want. What's your main focus? Are you looking for consistent cash flow, or do you want the stock to jump through the roof? Okay, but if you already did a covered call, you're probably not looking for the stock to jump through, especially with Macy's. They're over 100 years old. If they're going to be higher than 12 or 15, it probably already would have been there. And that's just my thought. What do I know? Okay, that's Macy's. That's my thought there. All right. Like I said, Chad, I'd like to hear more from you, dude. Covered calls are a way to steady early retirement. Yep. All righty. 5-9 reseller. Good evening. Uh-oh. Somebody wants to take a look at Hershey's. HSY. Hershey's. Helps if I was right there. HSY. Hershey's. Interesting. Check it out. There's the high, the low. Where was it? Where is it? Look at the motion. Up, down, up, down. What's going here? 161.45. The 162s. Sorry. Not 1%. Don't get me wrong, I love Hershey's when the numbers are right. But at 161.52, the closest strike price is going to be 162. But the 162 is going for 130. Well, no. For me, if you like Disney, Hershey, more power to you. All right, what do we have next? Next. Milo. Hey, James. Okay, we just talked about that. Have we done Pepsi yet? Let's do Pepsi right now, Terry. Ooh, is that what I think it is? Bummer. Now, we've been following Pepsi for the last week. Okay, look what it's doing. For the last week, no real direction anywhere. So again, here was the bottom we thought was the bottom. She went up 1 day, 2 days, 3 days. Now she's pulling back down again. Haven't found the bottom yet for Pepsi. Still bottom fishing. Now, this is not bad going side. They call it going sideways. 132 to 128, just going sideways. So fine, there are ways to trade a sideways market if it's just going sideways and you like the company. Sorry, what's next? Pepsi's going to be a no. All right, now somebody asked for Kroger last night. Interesting. High, low, where was it? Where is it? Look at this. Up, down, 68.20. We'd be looking at the 68s. Go for 78. You take that, no. 69. Yeah, no. Sorry, the number's just horrible for Kroger this week. Now, I like Kroger, I do. Can I trade stocks at 10 years old? Uh-oh. Abby, you shouldn't be here. No, my daughter was 9. I opened the account for her and I supervised for her. Under the age of 18, I'm not allowed to talk to you, kiddo. You should really have your parents do that for you. But, you know, hi, thanks for stopping by. Thank you, Ben. Try to approach it to her. Right. Luigi. I just hold on to stocks and wait for them to go back up. Then sell a covered call again. Luigi, there's absolutely nothing wrong with that whatsoever. However, if the stock is coming down, let's say you got it at 74 and it's coming down, why not, if it's at 66, why not sell the 70s or the 72s? Because it's so far away, there's not a less chance of it being called out. It's just a thought. Mark Anthony Turgeon. Let me put it that way. I have Mara at 1580. All right, let's pull Mara up. M-A-R-A. Let's see what Mark has to say. Okay. At 1580. It's trading at 1436. Okay. Would you sell a covered call at 15 for a 2% premium and get, if it gets close, roll it next week? Absolutely. I like that idea. Well, let's see your other one. Or would you sell at 16, make sure you will never lose money? Well, Mark, the way I'm looking at it, BK Wesley, how you doing? The way I'm looking at it, Mark, is Mara giving you a consistent cash flow every week at 1% or more? Yeah, every once in a while you lower or you adjust the strike price in accordance to where the stock is. So the stock at the moment is at 1436. Now the 1450 is going to pay the most money, but it also has the highest risk. The 15, it might be far enough away to get you a good premium. The 1550, you're going to get less premium but has less risk. So the further away you go from the current stock price, where all the action is, the further away you go to the upside, the less premium you bring in. Now, if you go backwards, then you might not get your money's worth out of it. But you always have the opportunity to roll it forward. And when you're rolling it forward, you're buying one option for this week or next week, and then you're selling one further out. So whoever buys the one further out, it increases the break-even number. And it's sounding confusing, isn't it? Yeah, believe it or not, it was created for a 9-year-old. That was a complicated question, something that never occurred to my daughter to ask. Because remember, the trading strategy I'm showing you was created for my 9-year-old daughter when she was 9. She said, Daddy, what are you doing? Can you teach me? So to teach a 9-year-old, it had to be simple. And what I just went over, it's not actually that simple. You know, if we bought it at 1436, where it is right now, I would tell her to sell the 14s. Because the stock doesn't have to do anything. And then the next week, sell the next one out, and she'd ask me, and then I'd say, well, which one makes sense with the least amount of risk involved? Okay, so it's really not that difficult. All right, where are we? All right. Yep. Okay, Flash, you're making $2,000 a week? That's awesome, dude. What are my thoughts on GLD? GLD, 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 tra-la-la-la-la. Yeah, no thank you. I can give you a couple of reasons. Number one, look at all the patchy spots. Gap up, gap down, gap down, gap up, gap up, gap down, gap up, gap down. Yeah, no thank you. I don't want to play. That's kind of like hopscotch. And does it have consistently 20 years of dividends? I seriously doubt it, but let's take a gander at it. Gander. Yahoo Finance. What was it called again? It was, I don't even know which one we were looking at. Oh, am I a fan of SCHD? Fin Friends. Okay, Fin Friends, do me a favor. Okay, I'm going to answer your question, and I will go really a deep dive and I'll give you some information on SCHD that you did not have before. But I need you to do me a favor first. And I'm going to be watching the screen here. I got 7 screens, and I'm going to be watching this specifically, looking for an answer from you. Okay? I want you to go to Yahoo Finance or Google Finance, whatever finance website you use, and count how many times SCHD has consistently increased its dividends year after year after year. Come back with that number, and we'll jump deep into SCHD. Okay? Fair enough. Okay. It's always going to be about the numbers, Mark. Okay? Is it best to do it here, or is it best to do it here? It's always, what did I buy it for? What option did I sell? Where is it at now, and am I at risk of losing? Terry wanted to look at, oh yeah, we already looked at that. I have no idea what we're looking at there. We were looking at something, I forget. Which finance site do I use? I use Yahoo Finance. I've been using it for the last 20 years. I just find it easier to navigate. We don't see the big screen on YouTube. We see the studio dashboard. Uh-oh. Uh-oh. Damn it, that's right. Thank you. I forgot to change screens. Alrighty, there's that. And there's that. And boom. Boom. There you go. That should do it. Sorry about that. That's my fault. I have a tendency to do that. I believe they increased it 13 times consecutively. 13 times consecutively. Thawkins! I'm in HPQ. What call do you think I should sell? Okay, hold on a second, Thawkins. All right, Fin Friends. Fin Friends? Not quite sure. That fish, oh, it's fish related stuff. Dude, you'd love my aquarium. Oh, whoa. Anyway, I don't know. Do you do aquariums? See, you have a fish there. It says fish fins. All right, let's go take a look at it. No, you're incorrect, but let's take a look at it anyway, because a lot of people like that thing. And maybe if I show you this, you'll change your mind. SCHD. All right, we're going to SCHD, the website on Yahoo Finance, to check and see how good a company it would be to, for covered calls. All righty, here we go. Okay, so I forget. Fin Friends. This is one reason I don't like SCHD. All right, here is the information on Schwab ETF. SCHD, Schwab U.S. Dividend Equity. Okay, come down here. Here's your numbers. Here's your high. Here's your low. Expense ratio. Year-to-date daily total return. Negative 3.35. Yield. You understand what the yield is, right? The yield. It's like when you dump in a whole bunch of money, what kind of return are you getting? Well, just the yield, your rate of return, whatever you want to call it, 4%. So you're putting your money into SCHD. It's paying you about 4% a year. And this year so far, they are down negative 3.3. But hold on, it actually gets worse. Finn. I should call you Finn, make it quick, Finn. Okay, over here on the left-hand side, we're going to go and click on historical data. And we're going to look and see how many years has SCHD consistently. Because you said increased 13 times. I think you're reading it wrong, but okay. All right, here we are again. Date, historical prices. Okay, so I want to hit the historical prices. Now, if you know what they are, here we go. The date, every single trading day is labeled right here. The open, the high, the low, the close, the volume, anything you want to know about the stock is right there, all the prices. Okay, but what I want to look at, I'm going to click on right there. Just the dividends. Now, the reason I want to go to just the dividends, Finn, is because the dividend is a portion of the company's profits. And if the profit consistently increases, well, more than likely, common sense and reason tells you that if the profits increase, the dividends increase. If the dividends increase, the profits, they go hand in hand. You can't have one without the other. You can't have higher profits without giving more back to the investors. So let's just take a look. I want to take a look at all of them, every single dividend they have. And wait a second, I only go into 2012. Well, number one, I want 2 decades. 2 decades would be 2005. So 2005 to 2025 is 2 decades. This thing only has 9 years. That's first. But hold on, it actually gets worse. You ready? 2012, 6.8. Then it went to 6.8 to 6.9 to 6.6. Okay, that's backwards. 8.3, 8.9 to 9 to 9, 9.9 to 10 to 8. That's backwards again. That's twice. 8 right there. Went to 13 to 10, backwards 3 times. 11, 14, 18, 16, backwards 4 times. 18, 19, 22, 21, 5 times. 21, 6 times. 26, 24, 7 times. So, in the last 9 years, this thing went backwards 7 times. So, I'm not quite sure SCHD is actually consistently profitable at all. And definitely not for 20 years. So I'm very strict on the ones that I buy. SCHD doesn't fit. It just doesn't. Sorry. Now, you're new here. And you're Fin friends, which I'm assuming you like fish. But seriously, you should check out my aquarium. It's freaking awesome. All right. Let's get out of that. What are we looking at now? Thawkins, you're into Hewlett Packard at 2826. What passes my test? Finn, what passes my test? Consistency of profitability. That's 2 decades of profits. You know what I mean? 1 year. It's like 2005. Then 2006 is higher, and then higher and higher. Well, I'll give you an example. 1, 2, 7, 11, 13, 15, 17, 21, 28, 30, 35, higher and higher and higher for 2 decades. Now, to make it short and sweet, okay, Dividend Kings, 5 decades of increased profitability. Dividend Aristocrats, 25 years of increased profitability. Dividend Champions, same thing, 25 years of increased profits. They're just a little bit less picky than the aristocrats are. I mean, think about it. Dividend champions, dividend aristocrats. They're a little snobbier. Anyway, dividend contenders, 10 to 24 years of increased dividends or increased profits. And then just for the fun of it, let's throw in Warren Buffett's list because, hey, good enough for Warren, good enough for me. So those 5 lists I just gave you, Fit, will give you about 300 companies that have consistently been profitable for at least 2 decades. Now, there are 10,036 different companies. We check once a week to see how many new companies they've added. So far, it's up to 10,036 different companies. Out of all of those, only about 300 fit what I'm looking for. So I hope that answers your question. That being said, let's keep on keeping on. Ooh, Hassan. Oh, you're giving it. Okay, Marks, thank you. Got that fixed. Moo Cow. Is Ford still a good one? Hold on, let's take a quick look at Ford. Come on. Come on. Come on, come on. No. Well touched. Look at that. Big drop today in Ford. Sorry. Okay, now we watched Ford go up 6 weeks. 6 weeks. Now we're watching it come down. Now, when I say I'm watching it come down, I'm looking for a bottom. Now, last Thursday was a bottom. Friday was higher, but today pulled back again. So I like 2 days to the upside. So I was really hoping today Ford would go to the upside, but it didn't. So it looks like we're going to put Ford on the back burner again. But it should be any day because she jumped from 8.4 all the way up to 10.8, which is over 20%. That's over a 20% jump. Now she's coming back down. Because think of it this way. Stocks go up. If you don't take your profit when your stock goes up, don't be surprised if it comes back down again. Because that's all stocks do. They go up, they go down. The idea here is to time it properly every single week. And what's wrong with that? I mean, you spend 10 to 15 minutes brushing your teeth. You want to keep them. Makes sense, right? So why not spend 10 to 15 minutes on your money because you want to keep it and you want it to double or triple, whatever you want it to do. It just makes sense. Oh, finance stuff. Okay, so Thawkins, you want to take a look at Hewlett Packard. HPQ. Interesting. All right, let's take a gander. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Sideways, down, up, down. We're at 24.91. The closest strike price is going to be the 25, and it's a great place to jump in. Look at the big gap down right here. Well, when stocks have a gap down like that, it usually has something to do with earnings or dividends or something like that. Well, it's great to be able to jump in and say, hey, I like Hewlett Packard. Look at the last action, okay? Down, but then came up and the gap filled. See, the gap over here, now it filled over here. Now it had a gap here. Well, that gap filled, created another gap. So what's going to happen now? 2 days to the upside. Thursday was the bottom. Friday was higher. Today was higher. Here's your 2 days to the upside. Now tomorrow, let's zoom in a little bit closer so you get a better look at it. Okay. Up, down. Here's the bottom here. 2 days to the upside. Thursday, higher. Today, higher. So tomorrow is going to be the deciding factor for me. Because I love Hewlett Packard. But before I jump the gun, let's see what the 25s are. Because the price, $24.91, the closest strike price to $24.91 is going to be the 25. Well, let's take a look. The 25 is going for 31. Okay, so just remember, we're looking for 1%. 1% of a $25 stock is 25 cents. Well, what are they offering us? They're offering us 30, 31, which is more. Don't get me wrong, 1% every single week is over 50% per year. Now, when you get good at it, it shouldn't take you long at all. Because let's look briefly what one of my mornings look like, and then you can ask yourself the same thing, because it's relatively simple. You take a quick look at it. What did you buy it for? Watch, you'll see. Let's get out of here. Let's go to here, to here, and here we go. First thing I want to look at, see, these are my stocks I have right there. First thing I want to do is I want to find out, what did I buy that for, where's it at now, and what does it mean to me? Okay, it doesn't take that long. In your mind, just do a quick little mental calculations. All right, first thing I want to do, right click, view trade. Okay, I'm in at 31.25 and I sold the 31s. Great. Well, why isn't it up here? DVN. Try it one more time. Okay, it's at 31.14. Okay, so I bought it at 31.25. I sold the 31s, and it's currently at 31.14, going up. Nothing I need to do. Everything looks fine. Great. Next, Harley Davidson. Anyway. Okay, I'm into Harley Davidson at 23.92. Well, currently it's at 23.67. I sold the 24s for this week, 51. Great, nothing I need to do. It only takes a couple of seconds. It's like Hertz, HTZ. Let's see this. HTZ, enter. Last couple of weeks, there we go. Hertz, view trade. I'm into it at 6.79. I sold the 650s and the 5s, and it's currently at 6.41. Don't need to do anything. It doesn't take that long. And to size up a chart, it should take you ready? Let's try this one. Let's make it bigger so you can see it. All right, we'll make it nice and big. All right, so I made the chart nice and big. I'm going to click it, and then you're going to count in your head. And you're looking for 5 things. You're looking for the high, the low, where was it, where is it, and what direction is it going. Just take your little finger, go like this. That's it. Ready? That's a little too big. Get a little carried away here, Jim. Okay, here we go. Now, ready? How long does it take? High, low, was, is, up, down, sideways, down, up. Not that long. Okay? It's in an upward trend. It's at a high right there. Look at your last 30 days. Okay? I don't buy at the high. Okay? Here's the time to buy. When it fell last time, then it jumped up. Yeah, we'll look at it another 2 or 3 weeks for it to come back down again. Because stocks go up. When they go up, people take their profits, and then stocks come back down. Basically, that's all they ever do. They go up, they go down. All right. Nucor. Hasoon wants to take a look at Nucor, NU. Okay. High, low, was, is. Look at this. Up, down, up, down, up, down. That 12, the 12 is 20. Awesome. It doesn't take that long. Okay. We all can see the high. We all can see the low. We can all see where it was. We can all see where it is. Okay. Currently, right now, there's the price right up there. It's confirmed 12. Great. If it's at 12 bucks, that's what I'm buying it for. Well, here's the $12 strike price right there. Come over. What am I getting? 20 cents. That's more than 1.5%. Now, 1.5% every week. Do the math. It's not that hard. 1.5% every week is somewhere around 75-80% per year. Okay, my goal is 1%. But if I can get 1.5%, I'll take it. Because see, the funny thing is, even that 0.5%, 0.25%, it adds up at the end of the year. It does. Try to figure it out. There's 52 weeks in the year. And guess what? No matter how you try to avoid it, you ain't going to miss it. You ain't. Because next year, New Year's Eve is coming, whether you like it or not. Christmas is coming, whether you like it or not. Summer is right around the corner. Fall is right after that. What's after that? Well, the future. It's coming whether you like it or not. You can't stop it. So you might as well jump on and take it for a ride and try to do the best you possibly can. Where are we? Dawkins, what about your question? Oh, your question. I thought I answered that one. HPQ. Okay? You said your question. 28.24, okay, which is up here. You have a couple of choices. Number one, we're down here at the 25. So what looks appealing to me would be the 25.50 or the 26. That's for me. If that's a little too close for comfort, the 26 or the 26.50. Okay? So the 25 is too close. Okay? Because it's at 24.91. So 25 is way too close. In my humble opinion. Some of you guys might want to ride the edge of the razor, not me. Especially when you bought up at 28. You bought up at 28, now it's at 25. So 25.50, maybe. 25.50 gives you 0.5%. Ugh. And then the 26s would give you 0.25%. But wasn't I just saying 0.5% a year? I mean, 0.5% a week is 26% per year? I don't know. Are you okay with 26% per year? But here's the thing. Okay, if you do sell the 25.5 and you do get the 0.5%, well, you got to follow it up and follow it until it goes back up to the 28. Okay? Or there's always the dollar cost averaging. You're in at 28 and change. Well, you can buy a bunch of 25s and then close the gap to try around 26.50. You could do that. It's called dollar cost averaging. Okay, so if you bought one for $100 and you bought one for 50, the dollar cost average would be 75. They'd meet in the middle, but they got to be even. If you buy one at 100, one at 50, they meet in the middle. It's 75. All right, let's keep on keeping on. All right. Uh-oh, come on. All right, Scott wants to take... Now, Scott, we already looked at Pepsi. Kevin wants to take a look at micro... Wait a second, hold on a minute. Hold on a minute. Now, he's in a Hewlett-Packard at 28. Okay, fine. I'm not into Hewlett-Packard. I don't know if any of you guys are into it. So let's just step back for a second and see what's in front of us. Well, number one, you got a 30-day bottom 30 days ago. You got a 30-day top 2 weeks ago. And then you got your profit taking with a gap down right there. Okay? Hits 23.5 and bounces up. Now we have 2 days to the upside, Friday and today. Well, that's a perfect invitation for jumping in. Sorry if I missed it. Well, let's keep on going. So at the 25s, okay, because that's where it's at now, 24.91. Now for his example, okay, further out. My example, if I'm jumping in, let's actually do one. Now, I usually do it every night, and I don't know if you guys remember, but I said that last week that this week we're going to run a tally of companies that we've actually picked up this week. So you guys can help me pick the stocks. And so far, we have 6 that we found yesterday. Okay, so Hewlett-Packard could be number 7 to add to the list if everything looks good. So far, the 1 year was fine, the 1 year chart. This chart's okay. I want to go to the seasonality chart just to double check. Okay? Now, if you're not familiar with a seasonality chart, let's check it out. Now, for those of you who don't know what a seasonality chart is, let me briefly explain. All the way to the left is January 1st. All the way to the right, December 31st. This represents a whole year, but not just a whole year. The blue line is the movement for this year. The red line is the 10-year average movement, the actual average movement. What did it do for the last 10 years? Well, normally, she just kind of goes sideways, makes a big dip in the end of the third quarter, and the beginning of the fourth quarter just shoots up nicely. Well, I'm looking forward to that happening, but at this moment in time, here's where we are, right here. So I want to zoom in and take a look at this area here. What does a stock normally do this time of year? Well, that's kind of refreshing, ain't it? Here's where we are. This is today, 6/2, June 2nd, Okay, usually she shoots up and then goes sideways before coming back down in about 2 weeks. So about 2 weeks before she starts to come down. So that's pretty good for jumping in for tomorrow if you can make it, if you can plan it right. Let's get out of that, back to here, and let's do a covered call at 25. Why not? Now, I'm just going to do one contract because somebody asked me last night, well, why can't we do 10 contracts? But the funny thing is, whether you do one contract, 5 contracts, 37 contracts, the rate of return doesn't change. Okay, so if you're investing X amount and you're looking at this here, whether you do 1 or whether you do 101, the rate of return is the exact same. So if you can invest 10,000, great. If you can invest 1,000, fine. If you can invest 100,000, that's up to you. We're all different. Everyone has a different amount of money attached to them. All right, let's keep on keeping on. Here's the order right here. I'm going to hit confirm and send. Here's what it sounds like. Are you ready? Buy 1 covered call Hewlett Packard HPQ 100. It's the weeklies. 6 June 25. That means this option expires this coming Friday. The $25 call option, which means I'm selling somebody the rights to buy it from me at $25. See, I'm buying it for $24.90. Okay, the price, purchase price, $24.90. I'm selling it for $25. Okay, get that little 10 cents. But that's not what I'm looking for. I'm not looking for that 10-cent difference. Hold tight for a second. The $25 call option against the stock at the market to open. You're opening 2 orders. You got a question over here? Nope. Someone just signing in? All right. We're opening 2 orders. First order is we're buying the stock. Okay, we're buying a portion of the company. I'm buying a cash-producing asset. So those 100 shares that we're looking at right now, everything, think of it as a as a laundromat, a soda machine, a hardware store. You put in a certain amount of money, and every week you get a certain amount of money back until you sell that company. Same thing. Okay, so if I went out and bought me a 7-Eleven or a McDonald's, okay, it would cost me X amount of dollars. Well, if I'm buying 100 shares of Hewlett Packard, I'm buying an asset that produces a cash flow on a weekly basis. I have no intention on selling it for less than I paid for it, so I'm looking for the 25. Well, if it's at $24.90 right now, how long do you think it might take to get to 25? I don't know. Well, what if it went down? Well, if it went down, I have all these other options that I can sell. Okay, I can sell the 24.50s, I can sell the 24s, I can sell the 23.50s, I can sell the 22s, I can sell the 26s, I can sell whatever I want to create a cash flow. When you own the store, like if you buy a 7-Eleven or Circle K, you own the store, you can sell whatever you want. So this is kind of the same thing. I own 100 shares of Hewlett Packard. I can get cash flow every single week. Okay, and the value of my Hewlett Packard store will go up, it will go down, it will fluctuate. The amount it fluctuates away from my purchase price, $24.90, will decide what strike price or what option I can sell against it. Okay, so I'm getting 42 this week. We're going to go through the numbers in a second. But it's costing me $2,400. And it's giving me $42 per week as a return. Well, if I do that every single week, and I get $42 every single week, well, how many of these can I buy? If one of them's costing me $2,400, well, if I buy 10 of them, that's $24,000. But if I'm getting $42 per week, and I get 10 of them, well, now I'm getting $420 a week. Okay, I'm liking the idea of changing the view of what we're doing. So we're buying the stock Yes, but we're also buying a cash-producing asset. Because by owning 100 share increments, 100, 200, 400, 800, whatever, I can sell covered calls every single week and create a weekly cash flow from that. Now I look at it every day. Okay, so where's it at now? Great. Tomorrow morning, where's it at now? Okay, Thursday morning, where's it at now? Friday afternoon, where's it at now? What option did I sell? Am I at risk? What do I do now? The questions aren't that difficult. It's like driving a car. You're driving a car. What happens if you see a pothole? Swerve, get out of the way. What happens if you see someone crossing the road? You stop. What happens if you see someone in front of you? You react as you progress. Do we know what Hewlett Packard's going to be like tomorrow? No, we don't. But does it make sense to me today? Am I okay with buying Hewlett Packard? I love Hewlett Packard. Let's do the numbers and see exactly what it comes to. Calculator. Clear that out of the way. Now, to find out what your rate of return is going to be, you got to take the profit, maximum profit, $42.50 per contract. If you can buy more than one contract, fine. Or sell more than one contract. Hopefully you understand what I mean. Okay, so $42.50. Now to find out the rate of return, you take your profit, $42.50, and you divide it by what the transaction cost you. Well, here, cost of the trade, including commissions and fees, $2,400. Okay, so divided by 24.58, and that gives a grand total of 1.72%. Okay, so it's 1.72. Well, if you think about it, 1.72 every single week, well, what does that come to at the end of the year? Well, you multiply by 52. That's 89.9%. Now, I don't know about you, but 89.9% for 1 year, well, that's not that bad at all. But you do have to put some time and effort into it. Okay, you do. Got to take a look at where is it at this morning. It's kind of like if you own a store. You want to know, are the employees there? Are they working? Well, these are my employees. Hewlett Packard, General Motors, AT&T, IBM, Ford. Those are my employees. Are they working? Yeah. Every single week, I write a covered call on every single position I have. Because I don't have the luxury of being wrong, and I don't want to go back to work. I'm not lazy. It's just that I've been working since 1973, and some of you haven't even been born yet. Okay? Anyway, Hewlett Packard. I like it. I'm going to write it down. What was that? 1.7. Alrighty. Alrighty. All right, let's go. What's next? There, and there, and there. Okay, back to the beginning. Here we are. Go away, kid, you bother me. Kevin, MU, Micron. Why would you want Micron, MU? Am you an idiot? Yes, you am an idiot. Anyway, okay, here we go, Micron. High, low, where was it? Where is it? Look at this. Up, down, sideways, down, up, sideways again. Look at that little range right there. Okay, here's a dip. Here's a jump here. Comes to the little range, a little bit of a dip, comes back to that range again. All right, well, let's take a look at it. Before we do, 98.18. Well, the 98 is going for 226. Okay, that's over 2%. Now, however, I'm not 100% sure Micron actually has dividends. But you asked, there's the numbers. Now, I have bought Micron in the past. Every once in a while, you'll see me breaking my own rules, if it makes sense, and depending on who is pulling the strings, who's telling me to buy Micron. If I get a call from the head cheese and say, hey, buy me some Micron, well, I buy some Micron. It's that simple. If it makes sense, of course. Well, let's check it out. A year ago, Micron's at 128. jumps up to 158 before dropping to the bottom of 61. Now that's more than a 50% drop, because 160 to 80 is 50%, but no, we're going to 60. So from 160 to 60, that's $100 decrease. That's a big drop. This is why I say, if you're not ready for something like that, you shouldn't be playing this game. So here you go. If you buy it at 160, now it's at 90. I would never sell if it's consistently bringing me in some kind of income. That's what I'm looking for. Simple, safe, predictable, consistent 1% per week. So what does Micron look like? Well, let's check it out. Look at the last 30 days. Hey, here's your last 30 days. Here's your bottom 30 days ago. Here's your top. It's just staying at the top at the moment. Not some place I want to be. Okay, now it may, in another week, create a new trading range. Okay, remember that trading range we saw? Hold on. This one right here. Between here and here, like it's going sideways, it's getting back to that trading range. So it may not look good this week or next week, but I'll keep an eye on it because I like Micron every once in a while. All right, holy cow, I got 60 questions here. Uh-oh, I forgot all those. Okay. Georgia Dell, Rio, I use Fidelity. Can I cash flow there? Yes, you can. Jay, you're welcome. Mr. Nice Guy, can you look up ConocoPhillips? C-O-P, ConocoPhillips. Let's try this one more time. C-O-P. Oh, interesting. Let's go take a look at it. Oh, my hair looks terrible. Looks like I got a mow. I don't even know how many people understand what a mow looks like. All right, hold on a second. That's a mow. All right, ConocoPhillips. High, low, was, is. Down, up, down, up. Okay, 87, 106. Well, 106 is more than 1%. Well, let's take a look at it. Thawkins, what do you recommend I'd sell on this one? Okay, Thawkins, I answered that question a little while ago. We're looking at ConocoPhillips right now for Mr. Nice Guy. Ish mi amor, ¿qué pasa? Or Ish mi amor, ¿cómo está? No, wait a minute. Bonjour, whatever. How you doing? All right, so ConocoPhillips. Let's take a look at the last 30 days. What does it look like? Right there. Okay, so here's ConocoPhillips. Down, up. Here's your 30-day high. Down. Here's your 30-day bottom. Okay, 1, 2, 3. 3 days to the upside on ConocoPhillips right there. Last Wednesday was the bottom. Thursday's higher. Friday's higher. Today's higher. That's 3 days to the upside for ConocoPhillips. Now, do you like ConocoPhillips? Is it the right time for you? Do you like it at this current price? $86.72. Does it make sense for you and for your objectives, for your goals? Because we're all different here. I like ConocoPhillips. I'm going to write this one down if the numbers come back decently. What does it normally do? Ooh, looks like we're going to peak. Look at that. Okay, so we're here. Oh, now that's enticing. Look at that. Here's where we are now. 1 week, 2 weeks. What happens after 2 weeks? Oh, let's see what happens after 2 weeks. There you go, after 2 weeks. Yeah, get in, get out, you know. Now, that's not guaranteed, okay? Just because it did it before doesn't mean it's going to do it again. See, from here we are right here. Okay, We're going to hit this peak in about 2 weeks. Then she's going to drop, go sideways for a bit. Then in August, she's going to shoot back up again. Now, is that guaranteed? No, it's not guaranteed. All it is giving us a roadmap of where they were before, what they did for the last 10 years, year after year after year. Well, what does ConocoPhillips do? They drill oil, they make gasoline. Well, but they haven't changed. Now the administration has changed, so we don't know what the new administration, how it's going to affect oil, gas, and all that kind of stuff. But it is there, and it is good play for this week. Now, knowing that, I might think about doing an 87, because that's right at the money, or even an 86. Yeah, because an 86 would be a safer trade. Well, think about it. 86 is a safer trade. All right, the last trade was 86.72. Okay, so if I'm going to buy it tomorrow morning at 87.47, well, the 87 is only going to give me the 1%. The 86, I might get that. But let's see what it looks like. Let's do the 86. All right, here's the 86. One contract at the market. Here we go. 99 is the profit, maximum profit 99. What was it costing? 8,500. So let's do some quick math before we look at everything else. Okay, 99 divide 85.01. Well, that's only 1.1%. And it's a safer trade. Because the stock right now is at 87.46. So if I buy it at 87.46 and sell it at 86, which is $1.46 less than we're currently at. So the stock doesn't have to do anything. It's less profitable, but it's still 1.1%. So for the fun of it, let's check out and see what the 87s look like. So if the 86s are 1.1, let's see what the 87s are. Okay, change this to 87. Okay, confirm and send. All right. Now this one is paying $147,850. It's still the same amount of money because you're buying the same stocks. So I'm just selling it at a different price. So the 86s, I was only getting $99 for it. So here's the 87s. The 87s, I'm getting $147. It's more money, right? Well, you'd think you'd go for more money. There's nothing wrong with that whatsoever. Let's see exactly what it is. Because remember, the 86 was 1.1%. So we got 147.50 divided by 85.50. Whoops. Divided by 85.53 equals 1.7. Okay, so the 86s are making 1.1%. The 87s are making 1.7%. Well, that 6%, that 0.6% could be a lot of money. Could be. But do you prefer safety or do you prefer profitability? Okay, and that's where your age is going to give you away. Because me, I'm 61. Okay, I'd take safety first. I don't have the luxury of being wrong. Okay, so you guys, if you're still working, you got the luxury of being wrong. You do. And it's weird to say that. You have the luxury of being wrong if you're still working. Now, keep being wrong. You keep being wrong, keep falling on your face, keep making mistakes until you're at that point where everything you do just falls into place. Now, I've been trading for over 20 years. My first 5 years weren't really that good. You know? That was the late 1990s, early 2000s. Yep, I was there for the Y2 crash. I was there for that. Anyway, let's keep on keeping on. So that's how you differ from one strike price to the other, depending on what is your goal and are you okay. Safety, profitability. Which one do you want? Because they each have their pros and they each have their cons. And you've got to figure out what's right for you. Because the number one question I ask people when they're done here is, does it make sense? That's it. That's as plain and simple as I possibly get. Does it make sense? It's a yes/no question. Either makes sense or it don't. Okay, because when you're 60, over 60 and you retire, you got two choices and only two. Don't let anyone tell you or lead you on thinking you have more than two choices, because you don't. You got two choices. That's it. Terribly sorry. Light, dark, hot, cold, hard, soft. Okay? Two choices. That's it. Do it yourself, or give up responsibility and give it to someone else to do for you. Because when you're retired, your money has to come from somewhere. And if you don't do it yourself, you're giving it to someone else to take care of for you. And I can almost guarantee with 99.9% accuracy is nobody has as much interest in your money than you do. Okay? No one. There's no financial advisor is going to be more concerned about your money than you are. And it's not that difficult. Especially the trading strategy I'm teaching you was created for a 9-year-old. 9-year-old. Now, she wasn't a Mensa student. Okay? She was just your average, everyday little girl. Average girl. Just your average girl. That's it. Daddy, what are you doing? Can you teach me? Led to where we are today. That's it. Daddy, what are you doing? Can you teach me? It's not something I was thinking I was going to hear, but it led us to where we are today. Next. Mara is not a dividend stock. Moo cow, thank you for that. We are not following the same 5 rules we did last night. Actually, we are. Every once in a while, I say I will buy what's on Warren Buffett's list. So every once in a while, you see me buying something that doesn't fit. But if it's on Warren Buffett's list, it kind of supersedes that. And I did say that earlier. Okay? How you doing, by the way? Dive Bandit, how you doing? Look at AMC. Uh-oh. What's all good about AMC? Ooh, wow. AMC. All right, why am I looking at this? We're at $2.60 a couple of weeks ago. Then we jumped up to 4. Now we're down to 3.44. Okay, the options at 3 are 45. That makes sense. The 350s are 11. That's nice. The 4s are going for $4. Well, that's not bad either. Well, the numbers look okay. Okay, what are we supposed to be looking at here? Okay, here's the low. That 250 jumps up to 4, pulls back. Friday's your bottom. Today was higher. Okay, you still got 2 more days to go. I'm not quite sure what you wanted to see, but I don't think AMC has 2 decades of increased dividends. I don't know. I could be wrong. All right. I still don't get why you trade Mara if it has no dividends. Okay, Mark, I want you to listen closely. If it's on Warren Buffett's list, I will trade it. Okay, even if it has dividends or not. If it's good enough for Warren, it's good enough for me. Okay, next, David, KHC. Heinz Ketchup, KHC. Now we're looking, I saw we looked at this a couple weeks ago. We were wondering where the bottom was for Kraft Heinz. It was a week ago Friday. Okay, now last Tuesday, Wednesday, and Thursday were 3 days to the upside. But look what happened on Friday and Monday. She went up and then she came back down again. Now don't get me wrong. I love Kraft Heinz, KHC. They're dividend king, which means they've increased their dividends for 5 decades. That works. Raheen, hello. Oh, well, I didn't buy Ford and sold a call for 2%. Okay. Daniel Berry, how are you doing today? Hey, good evening, Brandon. Rhonda, I was at Rhoda. Rhonda, it's this live. Oh, you mean is this live? Okay, yes, but I have too many questions to answer everybody, so I'm trying to do my best. Antonio Jack, it's nice to be here again. Cool beans. Hello. Hussein, thank you. You're welcome. Antonio, what's a good amount to start with? Okay, now we're all different, so I can't tell you what to start with. Only you can. But what I do encourage is people to paper trade and get the understanding of how everything works before you throw real money at it. That's just common sense. That some people jump the line and skip that part. I encourage people, paper trade for a while. Understand it. You will know when you are ready to put real money in. Let's keep on keeping on. Oh my goodness. Oh, I got me a hater. Wonderful. All right, thank you. What's a good amount? We're all different. Moo Cow, 1.2. Hewlett Packard, 25 strikes. Cool beans. Fentanylator. What is that? Fentanylator. Nobody's buying your course, little bro. That's funny because I never even offered one. Please, can you explain why you hold on to Mara and X if they don't pay dividends or almost nothing? I like US Steel and I like Mara, and other investors like US Steel and like Mara. It is what it is. US Steel's been around for over 100 years. Mara is relatively new, so I'm not quite sure. Do you do trading strategies? I'm new. Yes, I do, Sebastian, but I'm only teaching one here. Good evening, my stock friend. Nick, how are you today? Thoughts on AMC? We already checked out AMC a little while ago. How do we get Buffett's list? Nick, Buffett's list, simple. Go to Google, Bing, whatever search engine you use. In the search you write Warren Buffett's stock list 2025. And it just gives you what the stock list is. Simple. Ask, you shall receive. I think that's Matthew 24. Hello, James. Can we do Riley? Ooh, let's do Riley. I actually bought some Riley this morning. I was doing some dollar cost averaging, and I said, why not? Okay, so here we are with Riley. You ready? 25 is the high. The bottom, 267. That's a big drop from 25 to 267. Well, currently you're at 301. This thing's been going sideways also. Take a look at this. Okay, this thing has been going between 3 and 6 for the last 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months. The last month's just going sideways. A little up, little down, little up, little down. Everything's looking good. Now, I have probably more Riley than I should have. It is what it is. Well, when you're dollar cost average, you want to try to bring it down as much as you possibly can. So, Riley, now I couldn't really tell you to jump into this because it's not jump out at you, hey, look at me, I'm going somewhere type scenario. Look at the last 30 days. Here we go. Here's your last 30 days. Down, up, down, up, down. So it's actually coming down at the moment. So no, it's not a great one for that scenario. Always depends on what you want. Nick, you're welcome, sir. All right, so let's go back over to here and check out some of these questions. 310 Life wants to take a look at Campbell soup. Good. Good. That's what Campbell soups are. Good. You don't remember that one. CPB. Ooh, look at that. So it should take you 3 to 4 seconds to see if or not. If you want to take a look at deeper. Anyway, 5 things. Ready? High, low. Where was it? Where is it? What direction is it going? Up, down, up, down. What's going on here? I want to get a closer look because it looks like it's bouncing off the bottom. Now, we all know buy low, sell high. Well, here's something you also knew. Okay, you can't get any lower than the low of the year. Okay, here's the high. It can only be one high of the year, and there can only be one low of the year. So the question at this moment in time, is this the bottom? Is it? Well, let's see. Let's zoom in a little closer to see if it is. Well, look at that, the last 30 days. Doesn't that look pretty? 30-day high, 30 days ago. 30-day low, a week ago Friday. Now look at this. 1, 2, 3, 4, 5. 5 days to the upside. Well, it's down. This is the bottom, not of the week, not of the month, the year. The bottom of the year, right there, a week ago. You can't get any lower than the low of the year. Okay, great. Fine. We haven't even looked at the numbers yet. Okay? 34.25. The 34 doesn't have 34.50, but the 34s are 55. Which means I'll be losing 25 cents right off the top if I do the 34s. Which means I'll walk away with 30 cents. Not quite 1%. The 35s, 15%. That's a 0.5%. So unfortunately, even though the chart looks good, it's not giving me 1%. There are too many other companies that will this week. It just means Campbell Soup didn't make it this week. Sorry, I don't know who that was. PLTR. Palantir. No. Wasn't that quick? Okay, 110 Sea Beast. I don't buy at the high of the year. Okay? For me, I don't buy at the high of the year. Because I've never once heard anybody say, hey, Palantir is at the high of the year. Let's buy some and wait for it to go higher. Now, how much sense does that really make? Okay, it's not a cash-producing stock for me. Okay, if you like it, great. I don't like Palantir because the numbers don't work, number one. And number two, it's at the high of the year. I'm sure there's other reasons, but I don't want to go into those right at the moment. Mark, do you sometimes roll over to higher price, strike price, 39 of the week, blah, 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 for next? Or do you always keep the same strike price? Okay, Mark, listen closely, because you'll hear me say this over and over and over again. Anytime I'm buying and selling, buying a stock, selling an option, it's always, always, always about the numbers. What are the numbers telling me? If I increase the strike price, what happens to the premium collecting? If I decrease the strike price, what happens to the premium collecting? If I change the date by 1 week, what premium am I collecting? If I go 3 to 4 weeks out, what premium am I collecting? It's always going to be about the numbers. What did I buy it at? What option did I sell? What's it at now? What should I do to avoid any losses and continue to create cash flow? Always about the numbers, Mark. Good question, though. Scott. We already looked at Macy's, Scott. Voss, good evening. That guy. You don't want to be that guy. I was that guy a long time. Hey, you still with that guy? Yep. Hey, what's that guy's name? Yep, that was me for a long time. Scott, we already looked at Macy's. Thank you for your time. You're welcome. The world you want to live in, girl. Nice to see you. Kevin, 93.50, just got in. Alrighty then. I have no idea what you're talking about, but alright. B. Lock LaFleur, Ooh, cool name. Thoughts on TRMD? Coda, never heard of it. TRMD. No. Wasn't that quick? Mike Anthony, good evening. Darren, we already looked at Hewlett Packard. User 1291285 blah blah blah. DAL, Delta Airlines. Didn't Delta Airlines having issues? I'm kind of curious. Not something I'd do. If you look, 30-day bottom, 30-day top, going the wrong direction. But if you really like it, I'd keep an eye on it for the next 2 weeks, I'd say. As soon as she comes down a little bit further, then maybe. Yep, no Delta, more Boeing. Samson, I like Boeing. Boeing, that's BA, isn't it? Yes, it is. Nope, not today, it ain't. Look at that. That's the high of the year, brother. I don't ever buy anything at the high of the year. RTMC, what's happening? Alrighty. What is that? Samson's Print Shop. Cool beans. Alright, so I got a whole bunch of questions right here. Mr. Nice Guy wants to take a look at Wally World. WMT, Wally World. No. Sorry, wasn't that quick? See, it should take you 2 to 3 seconds. 3 to 4 seconds to isolate a chart. Right? Up, down, up. It's at the high of the year. No, thank you. Now, Costco, COST, I don't do stocks over $250. This thing's $1,000. I don't know what it is you see in me, but you think I'm going to pay $1,000 for a share? No. See, I can get the same rate of return on a $10 stock. Why would I pay $1,000? I mean, it's just a question. BMY, Laurie wants to take a look at Bristol Myers Squibb. Ooh, interesting. Check that out. High, low is, look at this. Down, up, down, up. Simple. 3 to 4 seconds. High, low is, down, up, down, up. Not that difficult. That's the chart. It tells me it's not at the high. It tells me it's not at the bottom. It's somewhere in between. Fine. 48.79. Well, we know the next logical number is going to be the 48. 49. 49, 50 cents a share. Well, that's more than 1%. That's a yes. Okay, great. Well, let's take a deeper dive into this chart we have here. A year ago, we're at 41.59. We bottomed out in the beginning of July at 39. Topped out in the middle of March at 63.27. But since then, look at this. It drops. Here's the bottom here 2 weeks ago, and that's definitely going to the upside. Well, let's zoom in a little bit more and see, does it have the capabilities to go higher? Higher. Check it out. 30 days ago was the high. 2 weeks later, there's the bottom. She went up, she pulled back. Here's the new bottom right there, 46. 1, 2, 3. There's your 3 days right there. Now, that's not a guarantee. That's not a suggestion. That's not a tip. That's basically an observation. I don't want you guys misinterpreting what I'm saying. Okay, do your own research. It looks good here, but I'm explaining to you as I see it, as I interpret it. Okay, you guys have to figure out what makes sense to you. All right? So, 30-day top, 30-day bottom. There we go. Let's take a look at Bristol Myers Squibb. What are they offering? Okay, the 49s. Okay, we're going to do the 49s. Okay, and the 49s are right there. And one contract. Here we go. And at the market. And here's Johnny. Buy one covered call, BMY, Bristol Myers Squibb. 100s, that's the weekly. 6 June 25. That means this option expires this coming Friday. That's 4 days away. The $49 call option against the stock at the market to open to open. Remember, 2 orders. We're buying the stock, we're selling the option. We're collecting $71.50 per contract. Each contract is $4,800. let's check out the numbers and see what kind of return that is. Profit, 71.50 divided by 48.29 equals a grand total of 1.4. Okay, so 1.4 is close to what, 80% for the year? Well, that's not bad. But the big question, and there's a couple of big questions, and they're all the same. The first one is, does it make sense? The second one is, do I like this company? The third one is, do I want to buy it at this price, do a covered call every single week, and get that cash flow coming in? That's the question you need to ask yourself. That guy, do I teach private lessons? Yes, I do. I always tell people, DM me with your number. I'll give you a call. We'll chat. And I promise, when I call you, when I say drop your number, I'll give you a call. I'm not handing it off to someone else. I will call you. And I will guarantee you this right here. I will not try to sell you anything. Now, if you want to buy something, that's up to you. But I'm not going to try to sell you anything. That being said, 1.1% of Bristol Myers Squibb, Dividend King, 5 decades of consistent profits. Why the hell isn't it on your list? That's the question. Why isn't it on your list? Anyway, up for consideration. Honorable mention, however you want to look at it. Back to the beginning. Here we are again. Right, Nick, Mark. Do you sometimes roll over to a higher price? Sometimes. Mark, we already did this. It's always about the numbers. Stay strong out there, bro. Thank you, Antonio. Samson's laughing his ass off. All right. Bristol Myers Squibb. Oh, Mr. Nice Guy. J.P. Morgan Trace. What do you think about pay sign for a call? Okay, Rhonda, I have no idea what you're talking about. Sorry. I have no idea what pay sign for a call. Pay sign for a call. I have no idea what you're talking about, Rhonda. But if you want to DM me, explain it. I love learning new stuff. Okay, Mr. Nice Guy wants to take a look at J.P. Morgan. JPM. Interesting. Okay. Doesn't take long. High, low is, look at this. Up, down, up, down. What's going on here? 264. Well, 264.40. The 265s are going for 227. Okay, that's going to be over 1% because you're buying it at 264. All right, so let's take a look. A year ago, 201. A couple of weeks later, the beginning of August, we have our bottom at 190. Our top, middle of February, 280. Oh, that was a good one. Whew. All right, let's keep on keeping on. All right. By the end of March, we're back down to 201 again. Well, isn't that a coincidence? But last 30 days. What do you think? Last 30 days. There's our bottom right here, 248. Jumps up to 270. Pulls back up. Now she's going sideways with a little bit of a downturn. Bummer. No, J.P. Morgan. All right, Scott, 154. Amazon doesn't have dividends, and I don't buy options. I sell options. Jim Bocci. Good luck with that one. AI and warfare, baby. All right, gotta love it. Jimmy, good evening. Jimmy Bocci. Hey, everyone. Memphis, Tennessee's in the house. Alexis, Memphis. Cool beans. AT&T. Mr. Nice Guy, hold that thought. Griffin. Oh, Griffin Reaper 81 wants to know if I'm alive. Say the date. What the hell is today's date? Oh, it's June. What the hell is the date? It's June 2nd. It is June 2nd, isn't it? Okay, I'm glad you like it. All right. What was I saying? I got distracted. Oh, no to J.P. Morgan. Sorry. Mr. Nice Guy, AT&T. Did you use price action? Do you? No, I don't. Okay, I look. Okay, you remember blank 123? When I said I created this for my 9-year-old daughter, okay, I love her dearly, but at 9 years old, she wasn't an A+ math student. Okay, logic, reason, common sense weren't really taught in junior high school. So it had to be simple. It had to be safe, predictable, consistent, all that fun stuff for a 9-year-old. Okay, the strategy I'm showing you, I created for my 9-year-old. So price action, no, it is not something you teach a 9-year-old. Because next you're going to be talking about the Fibonacci. And then you're going to be jumping into the retracements. Then you get the head and shoulders, the dead cat bounce, all that kind of weird stuff. No. For a 9-year-old, simple, safe, predictable, consistent, all in less than 10 minutes a day. That's it. Okay? Adults have a tendency to throw all this kind of fun stuff in there to make things more complicated. Now, if a company's consistently profitable, they're either profitable or they're not. There is no third way of looking at it. Sigma, Guma, okay, whatever the hell that is. I have no idea what that is. So that's it. For a 9-year-old, simple, safe, predictable, consistent, 1% per week. So adults, like I say, want to make it more complicated. How do you structure in 1% gains and taking profit? I get greedy. Jeter, you be greedy as much as you want. At some point, you're going to lose because bears make money, bulls make money, pigs get slaughtered. Okay? If you're greedy, eventually you will pay the piper. Mr. Nice Guy, why doesn't Yahoo Finance give information for the Greeks on the stock options? I can't find it. Oh, Mr. Nice Guy, I honestly don't know. I don't use Yahoo Finance for that information because I use Thinkorswim and the Greeks are already there. Everything I could possibly need except for historical performance is available on Thinkorswim. That's why I use it. I wrote a book 15 years ago on choosing the right trading platform. I looked at a lot of trading platforms. This is the only one that I know of that has the trigger trade that I was looking for at that present time. Mark Antonio wants to know, how do you lose with this strategy? I'm going to tell you how you lose with this strategy. Number one, you hit the wrong button. As silly as that may sound, yeah, a lot of people hit the wrong button. Sell instead of buy, buy instead of sell, 150 contracts rather than just one, By hitting the wrong button, that's where most people lose when they're starting out. Okay, I've been trading for over 20 years. This year, I hit the wrong button 3 times. I hit the wrong button once in the last $2,500, like that. I said, damn it, because it hurts when you do something stupid. But it does happen, and don't think that you're above it, because everyone does it. Okay, also, a way you can lose is by entering the wrong symbol. That's why I always tell everybody, anytime you do a symbol, you write it out, and you type it out, and then you read it out loud so that you can hear what it is you think you're doing. Because your eyes and your fingers and your ears aren't always on the same page. It just happens. Okay? The funny thing is, I hit the wrong button once on a live trading show with everybody watching me. I'm doing the click, 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 click. And I said, you guys just didn't see me do that. Why didn't anyone say anything? Anyway, it's $2,500 down the tubes. It does happen. You lose money by not consistently keeping your eye on things, not knowing what you're doing. Okay, it's really not that difficult of a strategy. Okay, Mr. Antonio, I don't get it. You said you have 2 losses this year, but why do you not roll them over until you made back the profit? Like you did for X. Well, I'll tell you why, Mark. Do you remember the TDS that we had? Do you know what TDS is? Trump derangement syndrome. Just because he says something, whole shitload of people panicked and sold and the stocks all dropped. I got 2 margin calls. Okay? Now, the only way you can satisfy a margin call is by putting more money in or selling something at a loss. Okay? So, the margin call was so big on the position that I had no other choice but to sell the stock because my other positions were all locked at a point where it didn't make sense. I had to push my stocks out 3 months in order to cover a covered call. A margin call. Now, the other one, I did a calendar spread. Different strategy, not something I teach here. But the calendar spread has 2 options. One you buy, one you sell. Well, the one that I sold, somebody said, oh, I want that. Now I had to deliver stocks at a certain price where I didn't have them. So there you can lose there too. So I have 3 losses. Now I took a loss today. Didn't do it on purpose. Okay. I sold an option on Harley Davidson last week and it got exercised because there wasn't a decent amount of premium to roll it forward. I overlooked it and then I missed it. So I went in and I jumped back in this morning, back into Harley Davidson, and I got to make up for that loss. So I have 3 losses at the moment. One was today. All right, let's keep on going. Jester, how do you stay structure and 1% gains taking profits? I get greedy. Yeah, one of these days, Jeter, you're going to do something and it's going to be so uncomfortable you'll promise you'll never do it again. Okay, you will. It happens to everybody. Heads gets too big and then they start doing stupid stuff and then they make mistakes. It's funny, but it's up from the beginning overall. It's funny, I have no idea which one you're talking about. Mr. Nice Guy, why doesn't Yahoo Finance... Yeah, we already did that question. If you never sold from start to end over 9 years. I have no idea what that means because that makes no sense whatsoever. XRP, sorry, it's not a dividend stock. It's a no. Quick, wasn't it? Hello from Indonesia. Namaste, Indonesia. I want to go there someday. Why do you have a margin call if you sell covered calls? Oh, Mark. There's a whole bunch of rules apparently you don't know yet. Dividend stock, okay. What about XRP? Nope, I don't do XRP. Sorry. I forget where I was going with that conversation. It's not even 11 o'clock yet. Holy cow. That's not one either. Sorry. I like my video. Thank you. All right, so let's keep on going. Mr. Nice Guy, AT&T, huh? Nope. Look at that. The high's right here. Down, up, down, up. Now it's going back up. Too close to the high for me on AT&T. Don't get me wrong, I love AT&T, I do. It's just too close to the high. I just stumbled across your channel, so what is your trading strategy you teach? Rhonda, good afternoon, or should I say good evening, Miss Rhonda. The trading strategy I teach is called Dividend Capturing 2.0. I created it for my 9-year-old daughter. Back in 2008, she said, Daddy, what are you doing? Can you teach me? That's how it all started. It's an innocent question. 9-year-old girl wants to spend time with her dad. Say, Dad, what are you doing? Can you teach me? So, dividend stocks, pre-qualified dividend stocks. Now, what do I mean? Well, for me, a pre-qualified dividend stock is a company that's consistently increased their dividends to their shareholders for a minimum of 2 decades. Then we sell a covered call on them just before they pay out their dividend because stocks go up just before the dividend is paid. That being said, I know a little bit about something that someone else doesn't know, and I use that to my advantage. Next, Mark. The question was, why do you have a margin call if you sell covered calls? Do you borrow money to buy stocks? I thought margin calls were only for shorting stocks. No. Do you POTUS 47? Is it influencing dividend stock MAR? Kenneth, you have to explain that question a little bit more. So Mark, for you, margin, okay? A margin and margin account and margin call, they all kind of go together, same thing. A margin or margin money is borrowed money. If I put in $10,000, my broker will ask me, do you want to use margin? So I put in $10,000, my broker will put in $10,000, so now I have $20,000 to play with. It's good when everything's going your way, but it's bad when things going the other way. So on margin, for every dollar the stocks go up, I make $2. It's reversed the other direction. So as the stock's going down, for every dollar it goes down, I lose $2. So the positions I had during the Trump derangement syndrome scenario, you know, that tariff scare they had and everything dropped. Yeah, everything dropped. That incurred a margin call, which means my stocks fell below a certain level and I had to pony up some money. I had to come up with some money. So yeah, I do get margin calls if I don't pay attention to what's going on. Little did I realize that people don't understand what the hell a tariff is. And then they all panic. If you understood what a tariff was, you wouldn't have panicked. Anyway, besides the point. The DTS is really weird, you know. Stocks drop just because he says something. Nothing to do with the company whatsoever. But just because a certain person says something, a whole bunch of people panic and they sell all their stuff at a loss, thus making things tank and drop. That's why I don't panic like that. Dan B, what is my weekly cash flow? My weekly cash flow averages somewhere around 1.4 to 1.6%. Averages between there. I say 1% because people don't believe when you say 60, 70%. 50% is more challenging. But if I tell you what I really got, I'm up 60% so far, and we're not even halfway through the year yet. That's freaking crazy. Let's keep on going. Underground, what's happening? Donnie B, anybody using this strategy? Yes, a whole bunch of people here using it. Marcus the Millionaire. Good evening, Marcus. J. Texayao. Cool beans. Mini Split Master, you're doing Hewlett Packard. Of course I am. Dan B. Thank you, Dan B. Okay, Dan, the question, anybody using this strategy? Yeah, there's a whole bunch of us. James, how are you? Watching your streams, but I'm on that weed again. More time for culture. We need to light one up together. I'm stopping by next week. See ya. Yay, Raphael. Gotta love it. Let me know when you're in the neighborhood. All right, Dan B. You got to give me more questions, Dan. Derek. Hey, by the way, someone pretending to be you texted me. Derek, just be careful. There's about 30 people pretending to be me. I don't text. I don't Instagram, I don't WhatsApp. I don't do any of that stuff. You want to talk to me, eyeball to eyeball, handshake, on the phone. I like talking to people. I do. All right. Griffin Reaper. You got nothing else to say over there, brother? Derek Noodle. What was that? Ooh, somebody wants to take a look. Uh-oh. Look at this. We got some good stuff here. There's Derek. Remy. Good evening, Remy. New Tropical. Good evening. Boogeyman wants to take a look at Lowe's. Why not do covered calls on blue chip stocks that go for 2 or 3%? Okay, play at your own risk. If you got something in mind, let me know. because all I do is blue chip stocks. And every once in a while, yeah, we'll get 2 or 3%. User 6360, very small dividend. I have no idea what that means. Okay, Boogeyman, Lowe's. Let's take a look at Lowe's, L-O-W. Okay. High, low, where was it? Where is it? Look at this. Up, down, 225. Well, the 225s go for 267. But we're losing 50 cents off the top, so that brings it back to less than 1%. Sorry, Lowe's is just a tad bit less than 1%. Jalapeno SCHD is one of the best ETFs. It depends on what you're looking for. Okay? Now, SCHD is paying around 4% for the year. 4%. 4. Okay? Jeter, how do you stay structure at 1%? Yeah, we did that one. Ron, Tesla. Okay, so now, Ron, Tesla is a capital growth stock. It's not a cash flow stock. So Tesla's a no. Jersey, Riot. I actually have some Riot, Jersey. Let's take a gander at it, shall we? Okay, high, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up, down. Let's go in a little bit closer. But before we do, 848, the 850s are going for 24. Now, 24 is over 2.5%. Well, that's nice. Well, let's take a look at Riot. Does it make sense? Well, a year ago, we're at 990. Okay, we dropped down to 640 in September. We jumped to 1580 in November. And then we dropped back to the bottom of the year in mid-April at 619. Well, look at that. A month ago, 619. Then we jump up to 950 and we drop back down again. Well, think about it this way. From 615 to 950 is a little over $3. Think about that for a second. $3. $3 is not a lot. But 30 days ago, the stock was at $6. $3 is a 50% increase. 50% increase 30 days ago to the high. And then she starts pulling back. Well, of course it's going to pull back. Go up 50%, people are going to take profits. People take profits, and then the stock drops. Well, here we are. Now it's turning around again. Is it? The bottom was Friday. Today's higher. What's tomorrow going to look like? So we want to look at Riot again tomorrow and see if it is what we want. Oh, user 1291 28 55 36 67 2. Why couldn't your parents name you Tim or Tom, Terry, anything but 1291 28 55 13 67 72 62? Sorry, that was your brother. DVN, Devon Energy. I actually have some DVN. Here we go, loves. All right, the high, 49. The bottom, 26. That's a drop. Then she bounces up, pulls back. What's going on right here? Now, we looked at Devon Energy earlier. But look at this. The high of the year, about a year ago, 49. The bottom, about a month or so ago, 25.80. Well, look at what she's done since then. Okay? There's your bottom here. She shoots up. Okay, from here to here. Yep, profit taking. Now we're back to here. Friday was the bottom, the new bottom. Okay, today was higher. There's one day to the upside. Could this be the new bottom right there? It could be, but we won't know until time passes. Okay, so tomorrow might be day 2 to the upside, which would mean Wednesday would be the first day to jump in, if that's what we're looking for. All right, so that's Devon Energy. It's going to be a hold for a moment. Lee, Tesla on a high, probably not, and there's no dividends. Absolutely right. El Pablo, where are the money bags, Jimbo? Money bags. I'm not quite sure what you mean by money. Oh, I have a money bag right here. Check that out. Money bag. That's weird. I never have a money bag just laying around, but I just so happen to have one. Anyway, hope that satisfied you there, El Pablo. Sebastian, Target, TGT. Now, Target, look at that. Hold on. What are we doing here? Okay, the high, the low. Where was it? Where is it? Look at this. Sideways, down, sideways, 93. So the 93.60, we look at the 94 is 104. Now, I like Target, but there's something about Target I dislike. That is the black swan. Okay? 156. Overnight, from 156, drops down to 120. That, my friends, is a black swan. Target is one of the very few companies that have the most black swans. Well, I see a black swan on Target 3 or 4 times a year. It has big, huge jumps directly related to the earnings reports. That's the market maker. The market maker says, all right, wait a minute, we're at 155 today. What do you mean we didn't make our earnings? Well, let's drop it down $30, which is almost a 20% drop. Just because they got a little bit of bad news. Now, they don't do it once in a while. You take a good look. Okay? One here. One here. Well, this one here wasn't that bad. But it happens often enough. Okay? I think I lost like $25,000 because of one of these stupid gap ups. Okay? I had Target a couple of years ago at 135. And it dropped down to 102. Well, at the 110, I started selling the 112s. Okay, I was making a nice return. Overnight, it jumped $36, and I had to buy back that option. I didn't know about rolling forward. At that time, had I did, I probably would not have lost. I don't know. It is what it is. Okay, it was a lesson I needed to learn. I learned the lesson. It was very uncomfortable. Ouch, that hurt. Don't do it again. Alrighty. Don't. Riot. We already did Riot. Next says, good evening. Cooney, good evening. New Jersey. Mara is on Warren Buffett's list. Yeah, I know. That's why we do it. Lee, Dollar General. DG. Done good. You done good, buddy. DG. Whoops, we see a little bit more than that. A little more. Here we go. Here's the high a year ago. Here's the low 4 months ago. Where was it? Where is it? Look at this big, huge drop here. It goes from 125, drops down to 80. Well, that's a big drop. And from there, she kept on dropping, and then she's recovering now. All right, so let's take a gander at it. Do we like Dollar General? All right, so let's jump in, see where we are. A year ago was the high, 141. Okay, mid-January was the bottom. That's 66. That's more than a 50% drop. From 140 down to 66. Yeah, that's more than 50%. But from there, from January, look at what we're doing. From January 66 to 100, that's a $40 increase. From January, okay, 64, to where we are now, over 100, that's a $40 increase. Now, a $40 increase on a $60 stock, that's like a 66% increase. That's a lot. So we got profit taking. Well, we had profit taking here. Then we have some more here. So what's going on here? I want to get a little bit closer. Last 30 days gives me a good idea of where do I think it's going next. Okay, where do I think it's going next? Okay, went up, came down. Here's our 30-day bottom. Shot up, 30-day top. Went sideways for a bit, pulled back, Thursday was the bottom. Friday was higher. Today we have a higher low and a higher high. I'm not really sure which direction it's going. So as much as I like Dollar General, I'd wait and see a little clearer of a path. Alrighty, clearer path. What else do we got? Lee, how you doing? Bobby G, what's going on? Alcatraz, good evening. Ricky Marsh, what's happening? Ricky Marsh from New Zealand. How's it going there, sir? Lee Dollar General, we just looked at. Josh, can you please look up EDP coin? It's going to blow. Now, Josh, I appreciate your excitement. However, I don't do cryptocurrency. Terribly sorry, brother. Okay, Coonley, thank you. Blessed. AI might take 60% of all jobs in the future. What your thought on it? What's my thought on it? It just might. Now, I've seen plenty of Terminator movies. I've even seen 2001: A Space Odyssey. Basically, they all come back to say the exact same thing. Okay, computers will take over eventually and eliminate humans. It's inevitable. Okay, it's going to happen. You know, at some point, the machine's going to say, wait a second, these pesky little things are in our way. It is what it is. Laurie, I got in BMY this morning at 47.31. Cool beans, Laurie. Thanks, Lee, but I'm not sure I know what I'm doing. Uh-oh. Laurie, why would you... Now, Laurie, I'm kind of hoping you didn't put real money in if you're still playing. Okay, BMY. You got in 47.31. Okay, so 47.31 is way down here. You couldn't have gotten that this morning. But this morning she opened up at 48 and got as low as 47.82. Okay. Hello, do I trade the futures market? No. I did futures decades ago. I don't do it nowadays. All futures have an expiration date. So it just, no, sorry. Bless you, thank you. Better than slots. Well, Laurie, you just keep checking in, and we'll keep taking a look at it for you. Secretariat. Oh, Secretariat. I like it when you say something, Secretariat, makes me happy. You were correct on Ford. Thank you. Was looking at the wrong week. Bought today at 9.94 and sold the 10s. Way to go, brother. Seatails, what's going on? Oh, I'm almost done with the questions. Stephen Martinez, Leggett and Platt, huh? L-E-G, Leggett and Platt. Wait a second. Yeah, Leggett and Platt. It's a monthly, okay? 20 June, 18 July, 19 September, 17 October. Those are months of the year. I don't do monthlies. The numbers just don't work. Terribly sorry there, dude. Stephen. Seatails, Parsons. Going to do my first covered call on Coles and Ford, but running the wheel strategy. Stephen, that makes sense. You know, some people like the wheel strategy. Now, I didn't teach my 9-year-old daughter the wheel strategy because too many moving parts. Okay? For a 9-year-old, simple, safe, predictable, consistent, less than 10 minutes a day. So the wheel strategy was just out of the question. Don't get me wrong, I like it. I think a lot of retiring people move it to safer funds. Yep, they do. Uh-oh, Steve Martinez. I love it when somebody always throws up that piece of crap. I just say that for me, because it's something I would never trade. The numbers just don't look good. SCHD is good for swinging calls and puts, if you know what you're doing. Always comes after that, Steve, doesn't it? If you know what you're doing. Sean, Pfizer. Ooh, let's take a look at Pfizer. Okay, fair enough. Thank you. Pfizer, PFE. PFE. Oh, nice. Look at that. Doesn't that look lovely? The high, the low, where was it? Where is it? Look at the motion. Down, up, down, sideways, down, up. Okay? 23.46. Come on. The closest one to 23.46, the 23.50. And look what it's going for. 23. You're getting 1%. You're squeezing 1% out of that. All right, well, let's take a gander. A year ago, we're at 29.23. The high topped out at 31.60. The bottom, a couple of weeks ago, right there, second week of April, 20.90. Okay. She went up, pulled back. Now she's going up again. Look at your last 30 days. 30-day high, 30-day bottom. Now she's going up. Come on, you can all see that. Down, up. It's not that difficult. The high is way up here. 24. Look at where we are. We still have plenty of space. Go from here to here. If, there's always a catch, isn't there? If you like Pfizer. That's it. Do you like Pfizer? PFE. Is it a company you think you'd want to buy and hold on to? Well, that's a big question. Okay, do you like it? It's a yes/no question. Are you willing to buy it and hold on to it? Maybe, maybe not. Don't know. Okay, but it's offering 1% if you like it. Okay, we got a couple more questions. Lee, you're welcome. All right. Uger, I haven't heard from you in a while. Procter & Gamble, PG, Dividend Kings, over 100 years old. What am I seeing right here? This could be quick. Are you ready? High, low, was, is. Look at this. Up, down, up, down, up, down. What's going on right here? Is it reversing? It sure looks like it. What do you think? 30 days ago, we're at 160. We bottomed out right around 157. And then we shot up to a little over 171. Well, profit-taking time. Think about it. She shoots up. Got 1, 2, 3. 3 weeks in a row going up. Well, yeah. Once you get to a certain height, it's going to start taking profits. I mean, think about it. If you bought something, okay, let's do a count. From 156 to 157 to 170. 68, that's 10, 15. That's about $15 on a 158. So that's only 10%. That's like a 10%. Now she's coming back down again. Sorry, I like Procter & Gamble. I do. All right. I think I'm out of questions. All righty. It's 11:21. You guys have run out of questions, so we're going to call it a night. Why not? Think about it. No more questions? I'm going to call it a night. So, that being said, hold on. We didn't look at Visa. We were going to look at Visa tonight, remember? We looked at Kroger, looked at Visa. All right, let's check it out. No, wasn't that quick? Didn't even have to look at anything. Look at where it is. Here's the high of the year. She dropped down. Now she's back up there again. Doesn't make sense to jump in. There's way too much money here to entice people to sell and take profits, and then she just drops. Yeah, no thank you. It's not a game I want to play. Yes?
I'm looking at ALD. Can you give me your opinion on it? It's gone down the last couple days.
Abelmal. Okay, hold tight. I'm going to want to know, now, did you jump into Abelmal?
I think
Okay.
The second part is, I think this morning I sold the cash secured put like at 50, selecting 1%. So essentially I have a strangle going on.
Okay.
Collecting 1% on each side.
Okay.
You know, it's had 4 days down, but I expect it to turn around. If it doesn't, that's okay too. But I just want to hear what you think.
Well, let's take a look at the whole thing. You ready?
Yeah.
A year ago was the high at 124. The bottom, 50. That's more than a 50% drop. That's more like maybe 60% drop. Ugh. All right, so a year ago, we're at 125. We drop down to 73, shoot back up to 115. Look at the last 90 days. Well, it's basically showing what's happening. Down, up, down, up, down, up, down. Okay, so she's a little bit down now, but look where the bottom of the year is, at 50. So where we're at now, at 55, it's really not that bad if you think about it. But then again, do you like Abelmal? Well, you must like Abelmal because you bought it. So let's look at the last 30 days.
And all that, it's an aristocrat, so that I love it now.
Oh yeah, 25 years of increased profitability. Why wouldn't you love it? But take a look at the last 30 days. Okay, 30 days ago we're at 63. We drop down, shoot back up, drop back down again, shoot back up. Here's the 30-day bottom right here. What is this chart telling you this thing's going to do next? It's going to find a new bottom, then it's going to go up. So yeah, you've already made some nice premiums on it, so why get rid of it? Just roll it into next week, and then maybe, just maybe in the next couple of days, this thing will turn around again. So I like Abelmal. I mean, I think Abelmal, I lost money on Abelmal 2 years ago. But that didn't stop me from buying last year. Okay? And if Abelmal looks good, I'll jump in again. Because right now at 55, because that's where it's at now, 55. The 55 is going for 146. And that's over 2.5%. Well, I like 2.5%. 2.5% would make me a happy camper.
Beautiful. Thank you so much.
You're welcome. Have yourself a good night.
Good night.
Yes, in it since last week. Kyle, I have no idea what we're talking about. Oh, can this work in Jamaica? Yes, it can. You need to get, what's the ticker? Oh, the ticker we were looking at, ALB, Abelmal. Oh, Kyle, you're in it since last week. Cool beans. Now, last week, she was in the 57 area. From 57 to 59. Okay. Well, we'll see what happens. Don't get me wrong. I don't have any Abelmal this week. I'll wait for the bottom before I jump in. Alrighty. Rojani Clark. Can this work in Jamaica? Yes, it can, as long as you have internet connection. Was that Kai Martinez? My thoughts on SLI. I've never heard of it. SLI. Standard Life Invert. Oh, Standard Lithium. Yeah, no. Sorry, who came up with that one? Kai? All right, two things. Number one, I don't do stocks with monthly options. 20 June, 18 July, 17 October, those are months of the year. The numbers just don't work. And number two, I only do companies that have 2 decades of consistent profitability. Okay, this thing was like $1.20 a couple of weeks ago. Okay, how can this thing have 2 decades, 20 years of increased profits? So SLI is a no for me. Don't get me wrong, it might be a great company. They might have the greatest people in the world. It might shoot through the roof. I don't know. It just doesn't fit what I'm doing. And, I do lose opportunities all the time because things just don't fit for me. Now, I have no idea how old you are, but I'm 61. I'm retired. I don't have the luxury of making a mistake, buying a stock that doesn't fit. in my humble opinion, is a mistake for me. Okay? I have a totally different strategy than most people do. I don't like taking risks. Is what it is. All right, so we're out of questions. I'm going to call it a night. What about ASML? What the heck is that? ASML. Yeah, I don't do stocks over 250 bucks because the numbers scare me. How's that? That's a good one, right? I'm an adult. I say something scares me. 700 bucks to 1,000 bucks. Look at this. A couple of months ago, it was at over 1,100 bucks. Now it's at 746. It went from 1,100 below 600. That's almost a 50% drop. Sorry. That makes me uncomfortable. I like stocks under 250 bucks. And when they drop, that makes me uncomfortable too. But can you imagine from $1,100 a high down to below 600? Well, it's kind of like going from 110 down to 60. Almost the same thing. Just an extra zero. All right. So we're at 11:30. We're going to call it a day. You guys have a great night, and we'll see you again tomorrow. Now, for those of you guys in the live trading, we'll catch you guys in the morning. Have a great night, everyone. Done over here. Have a great night. You guys on Instagram, have a great night. You guys over here on this TikTok, talk to you later. And everybody here trades Forex. Everybody here trades Forex. And I'd love to be different. I trade Forex. Okay. You have fun with that. I don't do Forex. Simple, easy, right to the point. Oh, good night, Studer Quick.